Good day, everybody. Brian. Hello, Brian here from quantlabs.net. All right, so I made a prior video about crypto. Now I'm going to talk about non crypto. But what I will say, what I'm about to show you across oil, dollar, and gold, and treasury, TLT, if you want the best performing assets, you need to go into crypto. I just did a video on that in the prior stream, and you'll see the top performing coins that were one is blowing Bitcoin away by, I think it was 4 times. So if you want to make money, that's where you go. Okay, so let's take a look at the other big assets everyone's interested in is gold. There you go. Gold is kind of flat, but it's bumped up from the low here. This is a daily chart. So right there from October 23rd, from 1816 all the way up to 2000 and 50, 60, and still over 2000. They're saying that gold will have a huge year. This is a CFD, but it's pretty reflective of the price of everything. So that's an interesting one to go with. But let's see if silver is beating it. So you can see here silver in right here. Yeah, silver is beating it by almost pretty close to double, and that's a daily chart. So again, that's what it's about. It's about showing you that certain assets do outperform other ones, regardless of what you want to hear. But poor man's gold, silver, is definitely outclassing uh, gold. Now, there's one asset I want to highlight here is the gold silver ratio, which I kind of watch a lot, and it has been declining lately. That's a good thing. And let's see if we can find it. No, XAU, XAG, gold, silver. So even gold, silver is outperforming gold. Oh, I'm sorry, the other way around. Sorry about that. Anyways, let me get rid of this. Reason why I show this is because when it starts to spike like this is something to be concerned with. I've shown this multiple times, but when you look at the all-time, you can see here 2008, it moved up, declined as the Fed pumped money up until here in 2011. Then we had a nice steady rise up. And then as they started pumping even more money in, or actually the reverse, I'm sorry, the global risk just peaked here. That was in March 2020 right there. And then it just suddenly dropped back. But yet you can see it's still trending up. And where we're at now is the equivalent of pretty well the peak of 2008 financial crisis. So what does that mean? Is that our next crisis probably going to be just as big as the the virus back in 2020? And that was not long ago because things are brewing up. This is all organic, so that's something to be aware of. So one of the better defense investments is definitely silver, gold, as I just shown you. Let's take a look at oil. Now remember here, uh, the profit factor I highlighted in the last video. You can see here gold, silver, 80, and that's on a monthly basis. So if I went to a daily, 97 or 0.97. But let's just check out gold on its profit factor. So it's over 1. These are not the top profit factors that you want. There are better performing assets. And I'm using just a strategy for Ichimoku. You can see here silver is better than gold as shown. Okay, oil's not doing too great. There's not much to talk about there. It's just declining. A lot of that has to do with China going through its meltdown. Um, and let me show that here. Let me see if I can get rid of these, or actually I'll load up another chart here. We'll use this one here. No, I'll load up a clean chart. So we'll use US oil. So we got a good clean chart here. And if I was to show you, let me just see if I can get rid of this. Oh, there we go. Okay, so if I'm going to show you China, let's say CN50, another CFD. Okay, this is China 50. Right here. So you can see here, its oil has really plummeted when China has been in decline. But China's obviously been in decline here. But gold did have a good run up earlier in the year. And because that decline started to happen along with inflation, was more dependent on China. So China's suffering. It's not doing too good. One other one that you can look at that I've been tracking is copper to see how uh, it will perform in the future along with China. You can see here, copper is starting to perform, right? So if that's starting a trend, we can at some point expect manufacturing to go up because copper is only going up as an input cost to pre-orders for manufacturing product. So that's a good sign. Okay, so that's gold and China, but I'm sure there's other growth in other countries as well. Um, States might be starting to come back. Okay, let's talk about the U.S. here. So with the U.S. dollar, the DXY, important run up here when things were not doing too good for last year when everything was doing bad. You can see that U.S. dollar was a good place to hide out in. No trading, you would have made money by just holding DXY. If you're a foreigner, just holding in U.S. cash, you would have made money. You would have gone from, like, let's say 90, July 21, and peaking here at around 115. So yeah, you would have had a nice 15, 20, 25% return over that time period just for doing nothing and just holding U.S. cash. You can see it's now starting to decline. That has to do with debt, for the national debt of the U.S. I think credibility of the U.S. is starting to have an impact on that. You know about the de-dollarization with the BRICS. So that might be early stages. I don't know. But I do think if there is a calamity next year in 2024, dollars should go up, and it should be a nice place to hide out in. As you can see with gold, already showing that, and silver as well. So dollar might be another place to be. Obviously not in oil, but funny thing is when you look at all time and you look at what happened in 2008, it shot up. So if we have another rally, it could happen in the next downturn, and it could rally again and break through this previous high around 140 or so, and that's possible. So we've got the DXY. We've talked about oil. Let's talk about the Treasury. So the Treasury is going up, and I can't remember. There was one that will show the interest of what they're charging for Treasury. Right now, it's around 5%. Once it breaks through 6, that's not a good sign because it tells people that want to hold U.S. debt, which is essentially it is. When you buy Treasury, that's to finance the U.S. government. So when you're holding that debt and the credibility that comes with it, when you have the U.S. government getting downgraded by, let's say, Moody's to, was it double A, not triple A anymore, maybe triple A negative, I can't remember, but it's not triple A. And yeah, so when you hold that type of sort of asset, it's a risk. So people want to get paid a higher rate. So when you have the five, six, specifically six, it becomes a problem. And you'll start to see, as I said, things will start to break. Mostly the banking industry in the States, which can happen, happened last March, 2023. But there's a lot of more shadow banks ready to drop off, just based upon how they operate. Just want to show this to folks and let them see for themselves how things look. Now, as I said, comparative to crypto's better right now. I think people are seeing that as a better alternative to make money, better returns for sure when you have, 30, 40, 50, 70, 80% return for the year. And some of these, that's where you should be. But that's my opinion. Others have their own opinion, but those that don't make that kind of return is just that. They don't care about making a return. They'll just say and use the feeble excuse of, well, it's volatile and it may not be here. Well, if that was the case, you could put a small portion of your portfolio into crypto and you probably get a lot more performance than your other balance of your portfolio. So always remember that. And these ETFs, I'm not sure how they'll perform with the crypto ETFs like the Bitcoin, but there's going to be definitely more manipulation in the market once that starts to happen. I've talked about that before as well. All right. Thanks for watching. Have a good day.